Good afternoon. Welcome to the FX Daily Roundup. And um, we have seen the euro going and come off quite a bit. And actually, the dollar index even push up, obviously, higher. One trades against the other, essentially, because the euro dollar comprises 56.4% of the cash dollar index. So I should say conversely higher. Couple of keynotes. We have seen the dollar CAD come into resistance. Our bias chart resistance is the same as yesterday. It's 31.82. Looks like we came up about, what, 37, 31.78, 79 so far. We are seeing the dollar peso trying to make a move here. Be just one moment. But we have seen, but one thing about the euro, I mean, someone's asking whether it's still bullish, and it's got to be frustrating for those that have played it, from the long side, but it's still bullish. You can look here as we did break that level. Now we're holding here at the 38%. You see here? So we're holding right here. So this is where we broke out. Now, one of the things that's a bit surprising, and I'm surprised it didn't provide better support. Look at the bunds. And the bunds were, remember from a few weeks back when we were talking about this level and we potentially break low, and that was when the euro was trading at 980 and said, hey, look, watch out. We'll probably finish the week much higher. And that happened. Well, the bunds, they found some values demand here. We tried to rally and we're failing. And I'm surprised that the euro hasn't found some extra support. That being said, nothing trades necessarily tick for tick, pip for pip, but will be encouraging for those that want to be long the euro here at the 38%. The thing that's frustrating is for those that got long, and we just didn't see that follow through. Okay, but we are, we're actually testing here. We've taken out the lows from this last week. I noted in the chat room, because our bias chart support was actually for 11.18, which was the same as yesterday, and it hadn't even quite got to 18 yet, but we said, we'll just stick with that. But as I mentioned, we actually did another webinar yesterday for a group. But I was talking about when you see these support and resistance here on the bias chart. Pull this over. What that means is that's where we expect to have demand come in. Like yesterday was, I think, I'm trying to remember, I guess it was, I don't know if it was the cable or whatever. And we came up, right to the pip or whatever and kind of turned away. Honestly, I don't remember which market it was. But my point was, and I was mentioning to the people there, was that just because, bear with me, just because we come into a support or resistance level, it doesn't mean that, although lots of times we do run out of gas. You can see here on the dollar CAD. I think the high so far today is 31.78, 79, and it was much lower. We were actually, when we did the European crossover, we weren't that far away. I think we were around 31.30 in the morning. And I said, hey, we're going to go and keep our 31.22. But look, I mean, we put this in place. It's been in since yesterday. It doesn't mean that that's where the market's going to run out of gas, but what it means is there's going to be demand there or supply. Okay, so like obviously with the dollar CAD, we started to pull back a bit. Well, the same thing came here with the euro dollar. That's where we expected to see some demand come in. A little bit came in, but if we go past it, and I was notating in the chat room, look, if we get a 2-hour close below 11.18, that's going to open the door for them to challenge last week's lows, and sure enough, that's what they're doing. We'll go to the 2-hour chart, and you can see here. You see all these touches. You see here. Right there, coming up against highs, come up against lows, all these body touches here. So if we close below the 2-hour, we got a 2-hour close below that, and we did. You see right there, the 2-hour close right there, 11.16.5. So we closed just under that 11.18. That opened the door for this market to come lower. Now, the one good thing for those that are still bullish or that are now bullish a euro, like some of the guys in the chat room, they were short the euro. EMEA was short, DK Trader was short. I forgot who else was short, and they were actually covering. As I mentioned, there was some scalp level support at 10.99. Some of them covered a little bit. I think Amir covered just under that, and then I think he did a little bit more covering as we came down here to the 38%. But the point is that so there may be some that obviously they benefited because they were short. I mean, benefited from their own analysis or whatever that was short. And so if you're looking to go on to be bullish now, this is not a bad area because, I mean, one of the guys in the chat room asked, well, is it still bullish? Well, yeah, it's still bullish. All it's done is come down to the 38%, okay? But one good thing that someone who's now starting to initiate positions can hang their hat on is going to be right here with the Bunds, because the Bunds have moved to new lows, which is, you know, they're the price to yield is going to be, you know, inverse relationship. So the lower in price, the higher in yield, that will be supported for the euro. It has been supported for the euro when yields were falling apart as price went higher and the euro went to these lows, and when it turned around, went the other way and we broke here. And this is right here when the euro broke above 980 and started punching higher. So that's one thing that bulls that are initiating positions can't hang their hat on here in the euro. Cable, we are pairing back a bit here in the cable. I think in the bias chart, what do we have? Let me see right here. 27.63. So the low for today has been, we're still holding above 28, so we're doing rather well, okay? And the peso's trying to make another march higher. Let's go and take a look here. Right here. So we're back up here trying to challenge this 1923.6. Now let's go to some of the bigger stories of the day, which is going to be gold and to a lesser extent really crude, but we'll talk about the gold. Gold has really got shellacked after we came back here. Look, we've already made 3 different trips here, here, and here to that 15, 17, and, you know, we came off yesterday. Today we really were falling apart like nobody's business. They tried to hold them. I came in, I scalped a little bit here and there. Actually was going to long side. I actually missed an opportunity to sell, and I actually came into an area that I was looking at on the volume analysis, and we rotated lower. I've come out okay, jumping back in. Actually, I got stopped out twice as we dipped lower. I came back in, caught a little bit, then came back in again. But I'm done for the day. Okay, so I'm just finished up a little bit better than, you know, better than even, which for when missed this, there was just a great opportunity here, and you know, it just goes to show you I was fooling with the little project that I've got. It's something I had to take care of. So trying to you know, trade and do that at the same time is a recipe for not very good results. And in turn with that, I missed a great opportunity here with the crude when it came up in here. But you know, like I said, that's what life comes up, and you have to go and sometimes you have to take care of those things. But sometimes it's best if you do, don't even trade. Like I said, sometimes when you miss an opportunity, it wasn't a huge opportunity here, although we came off. But frustrating to see that come right into some beautiful resistance and some supply right into there, and just go and miss that. But it is what it is. Things happen. Life happens. We are seeing the S&P is going and pair back here from here. You know, another big surprise has been, not big surprise, but certainly with this whole trade business and all that, look at the dollar yen. Man, just going even right through our bias chart resistance, which today we had at 895. Let's go and pull this up. And we're pretty close once again back to the pivot, that huge 927. I mean, if we were to get a daily close, it looks like they pretty much did away with it. Last week, you can see this gravestone doji, and boy, we came off for 125 pips off of that. But here we are, attacking it right again. You know, this is a tricky one here, because if we get a daily close above 927, here's what you want to look at, because we got this whole phase 1 business. We talked about this last week. If we got above 927, it would open the door for 1050. What might happen is this whole phase 1 signature thing, whatever. I mean, that's been out there for so long that, you know, you could almost tell one of those Charles Dickens novels with it. I mean, that's how long it's been out there. So my concern is if we do get it, it could end up being a blow off top. Not that, like I said, you don't go, like I said, thing about trading, it's all about probabilities. And one thing's for sure, I'm out of the predicting business, because anytime I try to predict, over the last few years, try to predict moves, ended up on the wrong side of the boat. So all I'm saying is, if we do get a daily close, it opens the door for 1050, but initially here. But my concern is that if we do get that phase one, we could end up closing above, stopping out a lot of people, and then over the next few days we could end up sliding. If we go back below 927, opens the door to go lower. We'll see what happens. Okay, don't know. But of course, getting back to gold, I mean, we have really come off in a big way in gold. Let's see, here we go back again. Let's try and open this up. Now, I use the trading view charts here. The thing is, I have another charting system up because quite often, I need to go on and reference where the futures are. So this is on the CFDs, and right now it's at what, 1483. Futures are actually 1484, which isn't. It's only off by about what, $1.50. But let's say when we roll into April, you're going to see a wider variance, and I have to go and be able to go on and share that with the chat room where we're at. So go and reference another charting package where I've got some live data, so I can go on and make the comparisons where we are. Same thing, you see the same thing happen to a certain extent in crude oil. But anyway, like I said, we really failed here. This was a triple failure here. You 1, 2, and 3, and then they've really come off quite a bit. I thought we might see some support at the apex. We did initially and tried to rally up, and then it slid right back down here in the gold market. Bear with me. Excuse me. And I reference this here. I'm going to go in and go into, and I reference that something I've been using recently, this volume analysis. And right there. Yeah, okay. So you can see here where the gold had broken down, and even if we broke lower, if you stretch this out a bit here, you can see here where we rallied. Okay, we came down here. As we rallied up, we were running out of gas in the same area where we had seen this, all this volume coming in here. So on the return rally, it's actually, like I said, offer the opportunity to turn around and once again fall apart. My point being is, hang on one second. I'll move this into a 5-minute chart. So some of these moves you can see here were coming in right there. If we came up, made this run back up here, it's not as clear here on the right here. It's actually right here on the 5-minute here where we came up to this 1494, and that's actually, if I were to show back in there, that's actually where the market ended up rallying back to the volume. And so you have if you look at the volume, you have an opportunity to go in and get a confluence of not only where the level is, and that was a key level here, that's almost 1495, but also confluence there with a lot of volume that was going on the return where the market had broke, where we had a lot of volume in here and the market broke. We came back to that, and then all of a sudden, obviously, the wheels really came off. I think, like I said, when you look at this, sometimes you have to look, even if you're scalping, you have to look at the bigger picture. And let's go back here. And the bigger picture, we'll look at the daily or even the 2-hour here. You can see we had a triple failure here. You see, here was that. This is that move that back on the, I think it was, we were in the chat room. It was on a Friday, and we're doing the analysis, European market analysis. I was talking about, hey, 1509, but watch out, we might make it up to 1516. And then the market really came off. I mean, really hard. Well, here's the second visit. Okay, up here, and the third. And what I did notice, I didn't even notice on the daily, was that we had this hanging man, and that really opened the door for this market to really come undone. And come undone it did, and what they did was they just pressed it for all it was worth. Even when it came down here into the apex, which is coming around the 1495, we had some support at 1497 initially, but you can see it, they just pushed it for all it's worth. So the market's in a little bit of trouble here. This morning we did the European market analysis. I was saying, I'm not sure really what this market wants to do. It's just kind of fiddling around. But what I didn't look at, which was the daily, which was you had that nice hanging man right here. And really that was a triple failure here at the 15.16 here. Now that's on the CFDs. I mean, obviously, I think in the futures it was 15.17 right there. But let's see, going back here, as long as the euro stays above this 10, it can go below 1065, but it needs to defend that over the next couple of days. But we've only come back to the 38%. A bit surprised here with the cash dollar index, but we would actually have to close, and I'll close with this on the cash dollar index. In order for this it's still bearish, but we would actually have to close the week above 97.89 in order for this to, and at that point, it would just negate the downside. Now, it's actually done some work and tested down here, so we have to give it probably a little bit more respect than that. Now, the immediate resistance is going to be that retracement high, which wasn't even much at the time, which is 98.11. But like I said, we would actually have to close above that for the week, and it would just negate the downside picture. It wouldn't turn bullish. We would actually have to close above 98.43 on a closing basis in order for this thing to reassert itself on the bullish side. Previously, last week, we were looking at 65, but because we've come down here and tested, if it were to get above this on a weekly close, then a daily close above 98.43 would reassert the bullish side. That's all we have for today. Thanks for joining us. Good luck trading with the rest of the day, and thanks for joining us here on the FX Daily Wrap-Up.